Hello everybody, welcome back. Welcome to day 6 of the Simple Trade Profit System training course. Hope you guys are enjoying it so far, and in this video we're going to get into some more meat. So I put together some trading tips and tricks that we can start implementing immediately, especially with the patterns that we're currently forming on Bitcoin. So in today's video we are going to talk about price action trading. Price action is essentially a term used for trading markets just based on what we've been learning so far, trends, patterns, without really using indicators, just what's really happening, what is price actually doing. It's called price action trading. So what you can expect in this video is how to tell if support will break or not, or if it'll hold, how to basically trade support and resistance more efficiently, how to identify low risk and high reward trades, because that's what we want. You know, we want trades that are less risky but have the reward we want. We don't want a trade where, you know, we're risking 20% but our target profit would only be 5%. You know, that's a high risk, low reward trade. We want low risk, high reward trades. So I'm going to show you in this video some strategies and some tips to spot those and find those, and how to avoid the ones that would be high risk with lower reward. And we're going to talk about how to know where other traders place their stop loss, so you don't put yours in the same spot and get stopped out with them. So anybody who's even remotely familiar with trading support and resistance, you'll hear, you know, all the courses and everybody will tell you, you know, you always set your stop loss right underneath support, or you set it, you know, right above resistance. And what ends up happening is you walk away from your computer or your phone, and then you come back and you got stopped out. And you know, you're like, I had my stop loss underneath the support. Why did I get stopped out? So we're going to talk about why that happens and how to avoid that. So my first trading tip is you want to set your stop loss away from market structure. By market structure, I mean that support and resistance. You want to set it, you don't want to set it right underneath there. You want to set it a little bit farther away to give it some breathing room, because a phrase you will hear in trading is the market will do what they call stop hunting, where the price will move into an area of support or resistance, and before reversing from that support or resistance, it will kind of swing up real high and then get rejected. And we'll see those like in real long wicks. Those long wicks I'm talking about. So price will swing up really high through resistance and then drop back down. Let me illustrate it with a few pictures here. So let's say this is your resistance, this is your support, price is coming up, and it may go way up like this before coming back down. And what most traders or most people will tell you is you always set your stop. If let's say you're buying, or no, you're selling. Let's say you're shorting. You want to set your stop right above the resistance. Well, price will typically come up. This is called stop hunting, and all these traders will have their stop loss set above this resistance here, and everybody gets stopped out. So what you want to do is you want to set your stop loss farther away from that support or resistance. So maybe like up here, so when price comes up and it wicks up like that and comes back down, you don't get stopped out. You want to basically set your stop in a place where if price goes that far, your trade would be invalidated anyways. It would mean that support's going to be broke or that resistance is going to be broken. You don't want to set it so close that a wick just takes you out. You want to set it in an area where if price reaches there, that means it's completely breaking it automatically. So you want to set it farther away. I got a few pictures here I want to show you. So this is like a bullish setup. We have our resistance here. Up here, we have our support down here. Ignore this. We want to set our stop loss down lower right here if we're putting a buy in, because you can see here, here's our support. Price wicked down right here and took out people's stop losses. People that want to put a buy in right in this area, they'll set their stop loss right underneath the support. Price ends up coming down and hitting their stop loss. So you want to set your stop loss down farther to give it some breathing room. And the opposite is true with my bearish setup, is you want to set your stop loss, ignore this, you want to set your stop loss up farther away to, so if price did get to this area here, that means this resistance is totally not valid anymore. That you want to set it in a spot where if it gets to it, it's completely reversing. So that's the first tip. Give your stop loss some breathing room. Let's go over to the chart and I'm going to show you some. So let's look inside this green box here. We have a trend line drawn and this is acting as resistance, and we want to short. The market's trending down, so we're looking for a short. We have some, I mean, look at all the times that it broke through. So if you're setting your stop loss right above this resistance, you know, you just continually keep getting stopped out by these wicks coming up. This one was actually a candle that closed, but it was eventually, this resistance was valid and it got rejected. But this is called stop hunting. That's what they do. It's basically the market is hunting for people's stop losses. All these are stop hunts. That's what they are. So you want to set your stop loss up a little bit higher, and that, which would basically say, if price went up, let's say you're shorting in this area right here, okay? You want to set your stop loss up higher. So if price actually did move up this far, this trend line's completely broken and it's no longer valid. So you want to put it in a spot where the trade would be invalid if it got there. So there's one example. I have a couple other ones here as well. You can see the same thing is going on. We have wicks coming up, taking out people's stop losses all along here. You know, so if you have yours up higher, you won't get stopped out, and then eventually the trade, if you're shorting, you know, would go into your profit. And I have one that has horizontal support, and you can see this very, very clearly. I mean, it just does it multiple times. We're looking at this first top line. This one's for something else. We can see here it comes down, it wicks down. This one a little bit, this one definitely, and this one taking out people's stops. So this support is valid, but it keeps coming down and knocking out people's stops. And what those stops are is they're essentially buy orders. So once they hit their stops, it forces the price back up anyways. So that's my first tip, is you want to give your stop loss some breathing room. You don't want it to be right underneath the support or right underneath the resistance, because, you know, I learned this the hard way, and I'm sure many other people have too. They get stopped out constantly. So give it some breathing room. The second tip is, and the next two I'm going to talk about are really important because people get them reversed. Let's say you're wanting to trade a breakout. You're looking for, you have your resistance, you have your support. You're wanting to trade it when it breaks out of the resistance, okay? You're wanting to catch that breakout right there. What you want to look for when you're going to trade a breakout is you don't want to see a strong move, fast move into the resistance, into the market structure. You want to see a buildup right underneath it. So you want to see something that looks like this. Comes up and then starts to build up underneath there for two reasons. The first reason is This is a sign of strength. Just buyers coming in and buying at lower or at higher prices is a sign of strength. So that's just an indication that price is going to break out. But the second reason is a risk to reward standpoint. Okay. Let's say you're going to enter this trade right here. You want to buy the breakout. You think it's going to go up. You see everybody buying in. Everybody's talking about Bitcoin shooting to the moon, and you want to enter this. You want to catch this breakout, okay? But you want to put your stop loss in case it gets rejected. So where are you going to set your stop loss at? Well, you would set it at the resistance or at the support. So you would have your stop loss set down here, right? Well, look at the distance between your entry and your stop loss. Your entry up here and your stop loss. You know, what if this is $100? You have a stop loss that's $100 away. You need price to move up $100 for it to even be a 1-to-1, trade ratio. So the risk to reward is just not, in your favor whenever you have a strong move into the market structure. Now, compare it to this one. So we have our support down here, our resistance. You're wanting to trade the breakout, but instead of a strong move into the resistance, we had a buildup right underneath. So you still enter the trade right here. Where do you set your stop loss now? Now you can set it under this swing low, any of these swing lows right here can be your stop loss, rather than having to set it all the way down here, because this has now acted as support. So you could set your stop loss right underneath this support. So now your entry being right there to your stop loss may only now be $20. So from a risk to reward standpoint, you're basically risking less on a buildup like this as opposed to a strong move into the market structure. And people get these mixed up because, they think you trade the breakout whenever prices start shooting up. You want to jump in on the breakout. It's backwards, because the way you trade a strong move into market structure like that is a reversal. You don't trade a breakout on these. You trade these as a reversal. So in this example right here, I would be shorting. I wouldn't be buying. You want to buy whenever you have a buildup underneath resistance. So like I said, it allows you to have a lower risk trade with your stop loss. It doesn't have to be as far down. So let me show you an example of this. Let's go to the daily. So look at price, sellers coming in and selling at lower prices here, and then all along here before eventually breaking out to the downside. So you're wanting to trade this breakout. Okay, you see this pattern forming, you want to trade this breakout. This is what you want to see. We're seeing it slowly build up. So if you traded this, where would you put your stop loss? Well, you would put it, right above here. You wouldn't have to worry about this one or this one or this one, because you have resistance right here. So we have this build up, this accumulation forming right above our resistance. You can have a tight stop, so you're not risking as much, and you have high reward. So there's a classic example of what you want to see when you're trading the breakout. You don't want to see just a swift move. Let's say, I bet you people right here in this area, they seen this fast move down, and I bet you they were all jumping on board. This is where it's going to break out. This is where it's going to break out. Reversal. Again, strong move down right here. People, oh my gosh, this is where it's going to break out. Reversal. Up here, strong move down, reversal. Strong move down, reversal. But then build up, breakout. So you want to see build up above resistance or underneath support if you're trading the breakout. Remember, that's what I'm talking about. If you're trading the breakout. Now, The opposite is true if you're trading reversals. If you decide to trade reversals, you want that fast, strong move into the market structure, into the support or resistance. You want that clean move like that. You don't want to see choppy buildup underneath it. And then here you would put a short in with your stop. Remember giving it some room, your stop loss up here a little bit, and then your take profit being around the support zone. So you want to see swift, clean, strong moves into market structure. You do not want to see buildup. And like I said, people get these backwards. They look for this fast move whenever they want to trade the breakout. They're like, oh, it's moving fast. I want to get on the breakout. And then it quickly reverses, as I showed you in those examples. And I think I have some more. Let's go. Let's get rid of this one. So look at some of these examples. So I've plotted these yellow, these are support lines that I zoomed out and drew. And look at what I'm talking about here, okay? Look at this strong move, big bodied red candles into our market structure for a reversal. Another one right here. Strong moves into market structure with a massive reversal. Let's see, I have another one right here. Another strong move, big body candle. This is a pretty big candle. This is a daily candle. This one, but it's got that wick on it, especially with this long wick reversal. We don't want to see buildup coming up underneath of resistance or above support. We want to see quick, fast moves into it. And here's the one that is most recent. When we had the huge dump just last month. Look at the massive body, big body candle straight into support that we've had plotted because this was a support from years ago. Strong, clean move into the support with a strong reversal. A reversal from 3,800 all the way up to 5,900. A $2,000 reversal. And look at how, so this is resistance. Look, we had a strong move into it. We also had another reversal. And then we started to build up underneath it, broke out of it. And then sellers came in right up here. We're kind of building up right on top of support. Sellers keeping pressure on the buyers right above support, broke below it. And right now, I haven't got all the other ones plotted, but we're kind of sitting right on top of support. But I know there's some resistance right up here too. So we're like in this this area where nobody knows which way it's going to go, but it's going to make a quick move either way. So those are my 3 tips. Just to recap: set your stop loss a little bit farther away from the support or resistance to give it some breathing room. Second tip is if you're trading the breakout, you want to see accumulation or buildup underneath or above market structure. It's a sign of strength, and it allows you to have a higher risk to reward trade because of where you can place your stop loss. And the third tip is if you're trading reversals, you want to see strong moves into the market structure because you will have typically a strong reversal right after that. So hope this helps you guys out. Use this and go back to the chart, go back to historical data and look for examples of what I'm talking about. You'll find them everywhere. So just keep these things in your mind, because right now we're in an area where we're building up. And like I said, I think at 8 o'clock here in about 45 minutes, for what time it is now, the new daily candle is going to open. We've been building up for a few days now. We're going to see a strong move starting tonight and probably all throughout the night, have a lot of volatility. So it's why I'm waiting to see what's going to happen, because it can be very risky, but it can also be very rewarding. So hope this helps you guys out, and I will see you in day 7.